Hello viewers. Today in my presentation I will be covering Bitcoin as a reserve investment option. Living a life of a senior citizen, 61 years to be precise, my investment strategy is how to preserve my wealth against rising inflation and interest rate cuts on my fixed income generating assets. I have a conservative target of making at least 15% out of my investment so that my wealth is protected. So I behave like a turtle so far as my move goes, slow and steady. With a commerce background and more than 4 decades of indulgence in stock market, I spend a lot of time in research investment options, though not necessarily heavily invested in them. Today, I will share with you my understanding of Bitcoin, BTC, as a reserve investment option. I urge all of you to note my disclaimer that this video has been prepared very assiduously by me for my education, information, and reference purposes, and viewers must verify the data and assumptions by consulting a financial expert before making any investment decision. If you choose to do so, any loss suffered will be your responsibility. So basically, Bitcoin is a decentralized digital asset that uses blockchain technology for secure, transparent, and borderless transaction. In this presentation, I'll focus on strategic reasons for acquisition of Bitcoin as a reserve investment option in a limited way to begin with. The global cryptocurrency market cap stands at approximately $3.38 to $3.95 trillion in mid 2025. Bitcoin leads the chart with about 55 to 57 dominance of the total. On 30th of August 2025, each Bitcoin was worth at rupees $1,08,270. So I'll focus on Bitcoin in this presentation. It's estimated that approximately 19.5 to 20 million Bitcoins are currently in circulation. This means that only 1 to 1.5 million Bitcoin remains to be mined. The increasing scarcity of Bitcoin combined with demand has helped to propel its current prices above $1,08,000. In 2009, Satoshi Nakamoto coded the total supply of BTC to never exceed 21 million. One interesting feature is halving events. New bitcoins are created as block reward to miners. Originally, each block mine gave 50 BTC. After every 210,000 blocks in 4 years, this reward halves. So in 2009, it was 50 BTC, in 12, 25 BTC in 2016, 11, 12.5, so on and so forth. In 2028, it is estimated that it will be 1.5625 BTC. Because of halving, the number of new bitcoins entering the circulation will shrink exponentially going forward. Once the last bitcoin is mined in 2140, miners will earn transaction fee paid by users for processing and securing transaction instant or block rewards.
It is interesting to know how many bitcoins are held by USA, China, and India. While USA and China hold 1,98 and 1,94 BTC amounting to approximately 21 to 22 billion United States dollars, India's holding is negligible. More than 90% are in private hands. This shows that government is not yet the dominant player as yet.
Retail holders like us can gain by being early owners of a scarce, global digital asset. When governments, banks, and corporations fight to hold BTC in the future, our small stakes could be worth disproportionately more. Rising demand or fixed supply equals price appreciation. BTC balances losses in other assets, stocks, bonds, etc. Your BTC could be used as collateral for loans, DeFi, or tokenized finance, giving it real-world utility. However, gains are not guaranteed. Price volatility and regulation will continue to affect BTC. Long-term holders need safe custody, hardware wallets, secure storage to avoid losing access. Why retail investors should consider buying Bitcoin? 1. Scarcity, hard cap of 21 million BTC, only till the 1 to 1.5 million BTC left to be mined, and by 2140 the supply stops. With approximately 94% already in circulation, scarcity is fueling long-term price appreciation. 2. Institutional or government adoption. Spot ETFs approved in US and Europe. Pension funds, banks, and asset managers are investing billions. US, China, UK, Bhutan, El Salvador now hold BTC in strategic reserves. This legitimizes Bitcoin as a state-level asset, not just speculative. 3. Inflation hedge or dollar risk. Global debt is exploding. US greater than 34 trillion United States dollars. Fiat currencies are vulnerable to inflation or political decisions. Bitcoin offers borderless, non-sovereign protection. 4. Best historical returns past 5 years. BTC, plus 64% total return. Gold, जोड़ 1-2% S&P 500, plus 17% risk-adjusted returns, sharp ratio, favor BTC. Long-term holders historically outperform short-term traders. Key risks retail investors face. 1. Extreme volatility. BTC has dropped 30 to 70% in past cycles. Buying at high levels, like now, 108,000 United States dollars, risks short-term drawdowns. 2. Regulatory uncertainty. While adoption is rising, governments may still heavily tax crypto gains, restrict usage in settlements, ban privacy tools or enforce surveillance. 3. Custody risk. Coins left on exchanges can be hacked, frozen, or lost. FTX collapse. Retail investors need to learn self-custody, hardware wallets. 4. Speculative hype. Price rallies often attract FOMO investors at tops. If macro shocks occur, BTC could retrace to $70 80K before the next leg up. 5. Competition or technology risks. While Bitcoin is the king of store of value, other cryptos, Ethereum, Solana, stable coins, offer different use cases. DeFi, tokenization, AI integration. BTC dominance could reduce over decades. Thank you. If you have found this video useful, please like and comment. Also subscribe to my YouTube channel @Khayal Mere Apne and Instagram @Arkha2109.